Bitcoin and gold, an inverse relationship. Summary. There appears to be an inverse relationship between Bitcoin and gold. One moves up, the other one comes down. One moves down, the other moves up. Based on Elliott wave analysis, Bitcoin appears to have made a new low and is poised to move up in the coming week. The Bitcoin Investment Trust is a margin-free instrument that is traded on the OTC and allows traders with a set strategy to take advantage of Bitcoin's extreme volatility. Gold appears to be heading into a bearish period, which suggests you should be selling gold. Based on my analysis, you should buy Bitcoin and sell gold in the coming week. As I was reading the last report that I published in Seeking Alpha on January the 8th, 2018, Bitcoin, A Trader's Dream, and the commentaries, I could not help but to take a look at the relationship of Bitcoin and gold since the inception of the Bitcoin futures market on December the 10th, 2017. What I found was a very interesting relationship between the price of Bitcoin and gold as an intermarket relationship. What we have seen with the Bitcoin phenomenon is the creation of a virtual currency which has established itself as a major asset. When you take a look at the amount of capitalization it has taken away from the market, either in gold or silver, or stocks and bonds, we really don't know from where. Close to $1 trillion has gone into Bitcoin. The increase in price of Bitcoin has outdone almost anything in history. What I find interesting is that when you analyze what has taken place, it has demonstrated what can happen to the actual price structure of an asset in a free enterprise environment that is not controlled by central banks or a government. It has put into question the actual process, the discovery process of fair values in any asset across the board, including gold, silver, stocks, bonds, and every other asset. You can look at these other assets and begin to see that these assets have been a product of major manipulation over the past 90 years at least. The difference is that technology now is breaking down the veil of that manipulation and is allowing the public to see what can be done with this amazing technology behind Bitcoin, which is really the source of this tremendous demand for cryptocurrency, blockchain. Gold-Bitcoin relationship. Since the inception of Bitcoin futures markets on December the 10th, 2017, the price of Bitcoin made a high of $19,171, shattering all records. When Bitcoin was trading at the highs, the price of gold was trading at about $12.65. And since December the 10th, the price of gold has risen to the high that we saw last week of $1344.50. Since then, the price of Bitcoin has collapsed from the high of $19,171 to a low last week of $9,231. This accomplished and completed the reversion to the mean targets into the standard deviation levels of 11,820 and 7,712, published on January the 8th in Seeking Alpha. I especially emphasized my recommendation during this time period when we published a report that Bitcoin was a short-term trade and that you should buy gold for the long term. It appears that this is exactly what happened. It has validated that there is a new kid on the block who is trading the other side of the coin as a virtual currency in competition with the fiat dollar against physical gold. Fortunately, the VCPMI algorithm has validated that the implied volatility of Bitcoin and the cyclical analysis that we use in the gold market are very similar in their nature and results. We are seeing that there is a close inverse relationship between gold and Bitcoin. The price of Bitcoin on March 10, 2017 surpassed the price of gold when Bitcoin went through $1,200. The price of gold continued to rise to make a high of $1,362.40 on September 11, 2017, followed by a steep correction back down to $1,238 an ounce as of December 11, 2017. Sometime on December 7, 2017, the price of Bitcoin exploded and accelerated into the high that was established on December 18th of $19,271, making a major top while the price of gold was trading at $1,241, making a low of $1,238 an ounce. Since then, we have seen gold run up aggressively to the high that we saw last week of $1,345 for over $100 an ounce, while again the low on Bitcoin was made at $9,231. What this intermarket relationship tells us is that there is a close inverse relationship between gold and Bitcoin. We are going to continue to watch this closely because it is telling us that we should be buying Bitcoin and selling gold as of last Friday. Just to review some of the activity that took place, we can see that the December 16 was Bitcoin's highest daily close, on that December 17 marked the interest spike high that took place in Bitcoin. Since then, it has dropped as much as $9,000, or about 50% in a matter of days, before it rebounded sharply, as it usually does. Bitcoin is going to continue to show this kind of volatility. This kind of volatility is a trader's dream if you have a system for trading this kind of market. It is not for the light-hearted. It is not for the amateur or beginner. Embrace this volatility, but do it intelligently by educating yourself first. It's pretty obvious that Bitcoin has taken away some of the luster from the gold market. Once again, this may be the beginning of a major inter-market relationship, but only time will tell. Bitcoin and Elliott waves. Bitcoin has reached a real pivotal point. Referring to the charts, it has made a bottom within the expected cycle date, which is expected to be around the middle of January in 2018. If you're an Elliott wave analyst, you can appreciate that Bitcoin appears to be tracing a very close relationship to Elliott wave analysis by trading out an ABC correction from its mid-December peak. The C wave decline that began on January the 6th would match the duration of the A wave decline of December 16th through the 30th. If it ran its course sometime around the 18th to 20th, A similar, C equals A, wave price objective has projected a drop to $9,400 for Bitcoin, which coincides with its 50% downside target that was accomplished at $9,600. If a low is validated during this time frame of January the 18th to the 20th, it would arrive exactly 180 degrees, or about 6 months from July 16th through the 17th of 2017 low, when Bitcoin completed a lesser degree correction after a 40% decline and held its fourth wave of lesser degree support at the May 27th low. It also entered its latest five-wave advance, which was expected. If this low is validated during this time frame, it will fulfill a 180-degree low cycle progression. Another interesting relationship to the gold and silver market is that Bitcoin has maintained a 120-degree or 4-month cycle, which is the same cycle that has prevailed in precious metals for the past 3 or 4 years. Bitcoin created a 4-month low, which projected the anticipated low during the January 18th through the 20th period. GBTC, a trader's dream. We are not taking advantage of Bitcoin's volatility by investing in the futures markets, which has a high margin risk. It is not really tradable for the lighthearted or for the uncapitalized investor. I'm sharing with you one of the instruments that offer no margin to take advantage of Bitcoin's volatility. This instrument trades like a security and offers the volatility for the variable changing price momentum indicator, the VCPMI, to produce and identify trades using the reversion to the mean with 95% probability. I'm looking at GBTC, which is the Bitcoin Investment Trust. Trade it over the counter. Trade it on the New York Stock Exchange. We have applied our proprietary variable changing price momentum indicator, the VCPMI, to GBTC. The primary driver of the VCPMI is the principle of reversion to the mean, which is combined with a range of analytical tools, including fundamental logic, wave counts, Fibonacci ratios, Gann principles, supply and demand levels, pivot points, moving averages, and momentum indicators. Mean reversion trading seeks to capitalize on extreme changes in the price of a particular security, commodity, or cryptocurrency based on the assumption that it will revert to its previous state. This theory can be supplied to both buying and selling, as it allows a trader to profit on unexpected upswings and buy low when an abnormal low occurs. By identifying the average price, the mean or price equilibrium based on yesterday's supply and demand factors, we can extrapolate the extreme above the average price and the extreme below it. When prices trade at these extreme levels, it is between 90-95% probable that prices will revert back to the mean by the end of the trading session. I use this system to analyze the Bitcoin market. Let's take a look at GBTC trading instructions for January 19, 2018. The contract closed at 1768. In using the first VCPMI filter, with the market closing above the 9-day moving average of 1334, it confirms that the trend momentum is bullish. The VCPMI also identifies for us the inverse relationship or reversion to the mean and gives us the alternative. If the market closes below this pivot point, it would shift the trend momentum to neutral. If it closed above 1334, then it is a bullish indication. But if it closes below 1334, it would negate this bullishness in the short term. The VCPMI therefore provides you with a defined structure to use as your stops or protective levels for risk management. Let's take a look at the gold market for next week and see what the reversion to the mean, extreme levels above or below, is able to identify for us the implied volatility for next week. The gold market closed at 1333 above the first filter, which is the 9-day moving average of 1292. Therefore, this gives us a weekly confirmation that the gold market is bullish. The algorithm also provides the inverse signal relationship. If the market closes below 1292, it would negate this signal to neutral. So it is your first level to use as a protective stop. The second filter that we use is the weekly price momentum indicator, which is the weekly average price or mean. With the gold market closing below the weekly price momentum indicator of 1334 for next week, it confirms that the weekly price momentum has turned bearish. But the algorithm tells us that if gold closes above 1334, that it would negate this short-term bearish signal to neutral. It appears that the gold market is moving into a neutral to bearish zone. If we do get above 1334 next week, it would negate this bearish sentiment. Because the market closed below 1334, it has activated the signal to exit short positions at the buy 1 level of 1323 and gives us a clear price level at the buy 2 level of 1313. Look to take profits on any shorts into corrections at these levels of 1323 to 1313. If you are short into the coming week, these levels can be executed to lock in profits. If you have multiple positions, you can exit these positions in stages. If we do activate these levels, you should cover your short positions and go long once activated. If the market goes down to 1323, use 1313 as your stop. Once the market reverses about 1323 after touching it, or 1313, after activating it, it activates the algorithm into a buy zone. The algorithm identifies these levels as demand or extremes below the mean levels, the buy 1 and buy 2 levels, as well as the sell 1 and sell 2 levels. With the market closing about 1334, if it closes about 1334, it would activate the target zones at the extreme above the mean of sell 1 level of 1344 to the sell 2 level of 1355, which is really the 2-to-1 implied volatility extreme level above the mean. Based on what we have seen unfold since last December, the gold market has met all the targets we provided since October 23rd, 2017. It may be that we are setting up for a potential correction in the gold market back into the low 1300s, possibly, unless we close about 1334. You should use the indicators that we provide to enter and exit specific trades for self-directed individuals. It appears that in terms of using Bitcoin investment trust, we came down to the levels of buy 1 and buy 2 as we come into this week. We want to watch very carefully the levels of demand in Bitcoin and the levels of supply in gold, given the close relationship between the two markets. The algorithm's analysis of the markets is telling us to buy Bitcoin and sell gold. Disclaimer. This information in the market commentaries was obtained from sources believed to be reliable, but we do not guarantee its accuracy. Neither the information nor any opinion expressed herein constitutes a solicitation of the purchase or sale of any futures or options contracts. It is for educational purposes only.